Unveiling 2024, your ultimate guide to investment trends for maximum returns. Hey there, savvy investors, and welcome back to our channel. Get ready to dive into the world of finance and investment as we unveil our ultimate guide to navigating the 2024 market for maximum returns. From the hottest trends to the smartest strategies, we've got you covered. But first, if you're new here, make sure to hit that subscribe button and turn on notifications so you never miss out on our latest insights. Whether you're a seasoned investor or just starting out on your financial journey, this channel is your go-to resource for staying ahead in the game. So grab your notepads and get ready to take some notes, because today, we're decoding the secrets to success in the ever-changing world of investments. 1. Last year's biggest winners. Okay, let's rewind a bit to 2023. Cash seemed like the king, with interest rates skyrocketing in high-yield savings accounts and treasury bills. But hold on. Multiple bank failures happened like a domino effect, freaking out consumers and investors alike. Suddenly, having money in the bank wasn't as comforting as it used to be. Where did the smart money go? The stock market, my friends. By mid-December, the S&P 500 was up nearly 25%, and the Nasdaq scored an impressive 43% gain. And who stole the show? The Magnificent Seven, formerly known as FANG stocks: Apple, Amazon, Alphabet, Nvidia, Meta Platforms, Microsoft, and Tesla. They all posted gains at least double the S&P for the year. But wait, there's more. The real heroes were the underdogs like Soleno Therapeutics and Applied Optoelectronics, with gains in the quadruple digits. Now that's what I call magnificent. 2. Bonds are making a comeback in 2024. When the Fed dropped interest rates during the pandemic, the housing market went wild. Refinances, home sales, it was a party. But experts say higher interest rates are sticking around, and that's good news for the fixed income market. Andrew Patterson from Vanguard predicts U.S. bonds could return a whopping 4.8% to 5.8% annually over the next decade. That's a game changer compared to the 1.5% to 2.5% expected before the rate hikes. Is the traditional 60-40 portfolio making a comeback? Maybe. But one thing's for sure, 2024 might be the year investors stop giving the stink eye to fixed income. 3. But what kind of bonds? If you're looking to beef up your fixed income game, listen up. Experts suggest short-term corporate bonds should be on your radar. Whether you go for an ETF, mutual fund, or individual bonds, you're likely to find higher yields and lower risk with corporates. Plus, these rates could outshine T-bills, currently boasting yields above 5%. Stash Graham from Graham Capital Wealth Management says, the patient investor can snag good quality, short-dated corporate bonds yielding 6% or more. Short-dated bonds can shield you from interest rate risks, given the uncertain future moves of the Fed. Sure, there's still a reinvestment risk, but hey, that's a burden some are willing to bear. In a nutshell, limiting market and credit risk while raking in 150 basis points more than the S&P 500's forward earnings yield, which is 4.4%, seems like a sweet deal as we step into the new year. 4. Savings will remain very cool. So the Fed has been on a rate hiking spree, but hey, it's not all doom and gloom. The top high-yield savings accounts are still rocking annual percentage yields, APYs, of 5% and more. Even if the Fed hints at lower rates in the new year, having some extra cash in your savings is still pretty cool. Cash is like the unsung hero of investing strategies, even if it's not sitting in a flashy brokerage account. And guess what? The wealthier you are, the more likely you are to have debt, but that wealth also makes it easier to pay off that debt. It's a balance, right? As we gear up for the year ahead, think about boosting your Roth IRA contributions and giving your savings a little extra love. And hey, why settle for laughable APYs on your accounts? Find a banking partner that pays you what you're worth. 5. Think smaller. When you think stocks, we've all been enamored with the big players like Google, Apple, and Tesla, the Magnificent Seven. But in 2024, let's pivot our focus to mid and small cap stocks. Stephen Colano, a certified financial analyst, is urging us to pay close attention to those trading at a discount to historical rates. Small caps have been flying under the radar, currently trading at a valuation of 19.5 times, compared to their 20-year average price-to-earnings ratio of 21.3 times. Now, that's a discount worth exploring. By shifting our gaze from the Goliaths to the Davids, You might just stumble upon hidden gems, growth opportunities with companies poised to accelerate earnings. So, as you plan your investment moves for the upcoming year, consider the potential in these smaller players. Keep an eye on the underdogs. They might just surprise you with their growth potential. 6. Have assets? Get thee to an advisor offering direct indexing. Now let's talk about a game changer in the investment world: direct indexing. This strategy isn't just a tax-saving wizard. It's a powerhouse for diversifying your holdings away from the dominating giants in the S&P 500. And here's the exciting part. It's become more accessible and affordable for everyone, not just the financial elite. Cyrus Amini, a chartered financial analyst, is buzzing with enthusiasm for direct indexing in 2024. It's all about personalization, cost-effectiveness, and steering clear of overloading your portfolio with overpriced stocks or sectors. This strategy empowers you to replicate an index by directly purchasing the stocks or bonds that constitute it. Why bother? Well, it allows you to emphasize stocks you believe in, or aspects of the index you find promising. Conversely, you can de-emphasize stocks or aspects that make you a bit wary. In the upcoming year, Cyrus predicts direct indexing will shine even brighter, enabling more personalization and helping investors avoid getting bogged down by highly priced stocks or sectors. So, if you've got a good chunk of taxable investable assets and you haven't explored direct indexing, it's time to put it on your to-do list for the year ahead. Especially if you're someone who stands to benefit from ongoing tax loss harvesting, which, by the way, isn't applicable to retirement accounts. That's a wrap for today's deep dive into the 2024 investment landscape. If you found this information valuable, don't forget to hit that like button and subscribe for more insightful content. We've covered everything from last year's winners to the potential in smaller stocks, the comeback of bonds, and the game-changing strategy of direct indexing. Now it's over to you. Where are you thinking of putting your money in 2024? Share your thoughts in the comments below, and let's keep this conversation going. Before you go, make sure to check out our other videos for in-depth analysis and expert tips. And if you haven't already, turn on those notifications so you never miss out on the latest trends and strategies to maximize your returns. Thanks for joining us today on our channel. Here's to a prosperous 2024 filled with smart investment choices and financial growth. Until next time, happy investing.